So if you clicked on this video because of the thumbnail thinking that I was going to share some SPX 0DTE extremely risky balls to the wall strategy to turn your $100 into $100,000, well, unfortunately, that is not this video. Today's video is going to be about how my M1 portfolio over the last 2 years has gone from $100 into $100,000, investing in the market consistently over time without emotion. This is an account that I have shared with you guys on this channel before. I've updated you on the progress, and I'm happy to say that this portfolio is now over $100,000, and you guys have seen it before. This started with $100. I consistently invest into the market, not trying to time things, but dollar cost averaging over time. And now I can confidently say that the account is over $100,000 due to my consistency and due to me sticking to this dollar cost averaging strategy that I want to share with you and update you on today. I hope that this video serves as an eye-opener to some of you out there that maybe aren't investing for your future and how important it is to consistently invest in the market and set yourself up for those later years. In 2 years, this has gone from $100 to $100,000. What is this portfolio going to look like in 30, 35, 40 years when, let's say, I'm 60, 65 years old? How much money am I going to have sitting in this account, giving me that freedom in my later life not to work, right? And to be able to use this portfolio to my advantage. While I do make options trading videos primarily, that does not mean that we cannot be financially responsible with our own finances, and that is definitely something that I still do. And I hope that this video shares with you how I sort of manage that myself. This is one of my portfolios, the one that I like to share with you guys online. So let's jump right into it. I hope that you guys enjoy this one. A little bit of a switch up than our normal videos, but this is also things that I love. This is what I do, and I wanted to share it with you guys here on YouTube. Press that like button, subscribe to the channel. Let's jump into the portfolio. All right, guys, so here it is. My M1 net worth is now $105,000, $122,000 in assets, $16,000 in liabilities, meaning that my total net worth is $105,000. In this M1 account, I have two accounts, one being a SEP IRA, one being the long-term that I share with you guys, and that's the one that we're about to jump into. So if I go to invest, here is the account that I have started from $100 and is now over $94,000, $94,220. This is the all-time since I started the portfolio equity curve, and you guys can see that right here. If I scroll over this, you can see that this account started with $101, and this is November 3rd of 2021. Now, take a second, right? And this is going to share with you and show you how important dollar cost averaging is. Take a second, maybe pause this video, go look at where the stock market was on November 3rd of 2021. This was almost the exact high of the stock market. The exact high of the stock market is when I started to invest in stocks. And you can see this portfolio has gone nothing but up, and it has now returned all time 53%. This should prove to you that there is no specific correct time to be investing in the stock market. I started to invest in this portfolio at pretty much the very top, and I'm up 53%. Now, what did I do to make sure that I would consistently stay in the market and average into the market over time and continue to see my money grow in this account? Dollar cost averaging without emotion, without human interaction. And that is the one thing I love about M1 Finance. Now, this is not a sponsored video. I will leave a link down below if you guys want to start your own account. You get $100 free doing that. However, M1 Finance will consistently invest in the market. It will pull money from my bank account on a weekly basis or whatever reoccurring basis you want to do. It will pull that money straight out of your account, and it will invest into the stocks that you choose, and it will do it consistently, and there should never be any human interaction. I take away all human interaction in this portfolio. I have not bought or sold or pressed a single button on this portfolio for the last 2 years. It does it all by itself. I set the parameters. I set the stocks I wanted to buy, and I set the amount that I wanted to buy on a weekly basis. So in this account, my rules for this account is I buy $500 worth of stock every single Monday. For the last 2 years, every single Monday, $500 have been pulled from my bank account, has gone sent into this M1 account, and stocks have been purchased with that. That has been the same exact thing for the last 2 years, and that is the definition of dollar cost averaging and being consistent in your investing. To sort of illustrate that, I'm going to go up here and I'm going to go to funding history. Funding history, this is what it shows what I've put in personally into this account. So 2021, I put $6,100 in this account. Last year, I put $26,000 in this account, and this year it will be the exact same. It should be around $26,250. That is the amount of weeks in the year times 500, right? So that's my funding history. And if I go to activity, we can now go to activity type, and we can go to deposits and withdrawals. And you can see here, if you look over on the left side, this is every single week. So $500 every single week. And if I got to go to the next, go to the next, July 3rd, you keep going down, right? All the way to February, next, all that, right? Next, 2022, next, right? 2021, next. And this is where it all started right here, November 3rd, 2021. So you can see over the last 2 years, it's been a consistent deposit every single week. And that is the definition, once again, of just that consistency and seeing your money grow. So if we scroll back down, we can see nice, beautiful equity curve. And when the market goes down, typically this equity curve will flatten out, right? Because at the time when the market is dipping, I'm still investing money. So it's evening out the portfolio. That's around this time right here, right? You can see right here over the last, let's say, few months, the market has been on a little bit of a downturn, but my portfolio value has stayed pretty stagnant, right? Because yes, I'm losing some money on individual stocks, but I'm also buying those stocks as it goes down, putting equity in the account, but then also accumulating more shares. And the mindset here is that as the stock's going down, you are accumulating more shares, you're gaining more equity, and when those stocks come back up, which they have recently, right? Look at this last few weeks on this equity curve. You can see my equity curve went from moving down and exponentially moving higher. Now, the reason why this is exponentially moving higher here is because during the downside on the market, I was adding equity, gaining shares, and when the stocks go back up, you will get that exponential increase. And as of right now, the account is right around all-time highs for me as of November, pretty much November 21st, which is today. So if we scroll down, I'm going to talk a little bit about my idea behind what I invest in, right? Because that's also very important, right? This is not going to work if you buy AMC, GameStop, and, all these nonsense stocks, right? Of course, that's not going to work. You can see the stocks that I invest in. There is nothing special. There's no strategy, nothing crazy about the stocks that I'm buying. These are stocks that you and I all know. We know they're solid companies, right? We know they are staples on the stock market, and that is simply all that I invest in. NVIDIA. I have a fantastic entry here on NVIDIA. Of course, this is helping quite a bit. I have 28 shares of NVIDIA at $192 per share. That is an extremely great entry. NVIDIA reported earnings today. It's about flat, but $192 a share, 28 shares on NVIDIA. If I go back, we can go down. Tesla, right? Tesla, we have about 43 shares at $208 per share, right? And we can continue to see Apple, right? Apple up 43%, AMD up 58%, Microsoft up 60%, Netflix, this is a big one. Netflix, I have 16 shares at $300. That's up very nicely as well. So stocks, guys, that are not, I'm not trying to find the next big company. I'm not trying to find the next dark horse stock, right? I'm just buying the stocks that I know are consistent and they are staples in the market. Google, another one. Shopify, AbbVie, great dividend stock. Uber, this was one that I recently purchased. You guys can see right here, I started purchasing Uber October 5th. I purchased about $5,000 worth at $44, 81 shares. That's up about 20-25%. If we continue to go down, Home Depot, which I'm actually red on, interesting, Boeing, and then Caterpillar. Now, if I click into this dividend names, you can see these are the dividend stocks that I do own, which is Costco, Coca-Cola, Procter & Gamble, Pepsi, Altria, Cisco, Chevron, and ExxonMobil. Not great, right, performance, but these are dividend stocks gaining a little bit of dividends on top. Why not? So that is the stocks that I own, right? And these are not stocks that you guys have never heard of. These are very common market staple type stocks, and I just consistently invest in them on a reoccurring basis week after week. Now, I did want to share a little bit more about how this M1 works, just to sort of clarify some things. The actual and target on the right side here, you basically are creating your own ETF, right? And I don't want to make this too much about M1, right, because it's not a commercial for M1, but I do love this platform and I do highly recommend it to people out there. Actual and target percent. So as of right now, you can see that my target percent on NVIDIA is 11%, Tesla 11%, Apple 11%, AMD 12%. I'm setting those percents manually. I'm setting up my ETF and I'm setting up the weights that I want to be in the stock. So let's say I like a few stocks more, I'll put a little bit more weight into those. If I'm a little bit more speculative on a few stocks, I'll put a lower weight. So for example, Uber, I have it at 5%. I don't want Uber being as large as NVIDIA in my portfolio. I still like the name and I want to be invested, but I don't want it to have that much weight. So that's something you can do with M1. You can see some of my lower percentage point targets are down here, and some of my big boys are up top around 10-11%. We can go through some of the year to date, whatever, etc. 1 year, this is the last year of return. This is 55% just over the last year. Year to date, 64% year to date. So since the beginning of 2023, this portfolio has returned 64%, $31,000. The last quarter, about 7%. The last month, about $11,000 in the last month on this portfolio. The last week, $1,700. And just today, down about $131. So guys, I wanted to make this video today because I think this is very important to some of you out there. If you're not doing this in the background while you're trading short term, I think you are doing one thing before the other. I think you should have a long-term portfolio set up for yourself in the background, making money over time, little by little, while you're attempting to learn to trade. This is what you should be doing before you start to trade. This is monumental for your future and something that should be focused on. I wake up very comfortable every morning knowing that this portfolio is here and it's building over time. And when I trade, I don't have much stress. I don't have as much stress. This is another reason why I personally am not as stressed when I lose money trading, because I know I have this portfolio, right, which will continue to grow. I think you want to focus here. Get this set up for yourself. Focus on your long-term growth. You can see what this has done. I started with $100 and it's now sitting over $100,000 just 2 years later. That's 2 years of your life being consistent. And of course, the amount that I put in may be a lot for some, right? So you do it on your own pace. You do what you can. If you put $250 a week, you would have went from $100 to $50,000, right? And that's great as well. If you put $100 a week, that's great as well. As long as you're putting something away for your future, investing consistently in dollar cost averaging, your money will grow. And this is something that a lot of people do not focus on. They lose focus on, and this is how we end up without portfolios in our later years. I hope that this serves as an education to some of you, an eye-opener. I have your best interest at heart, and I really do believe that this is something that you should set up. If you guys enjoyed today's video, press that like button. If you want to start your own M1 portfolio account, the link is going to be down in the description below. Thank you again for all the support here on the channel. Press that like button, and I hope to see you in the next one. Peace.